Syndax Pharmaceuticals has emerged as a mid-cap biotech with two differentiated therapies and a clear path to profitability. The company's portfolio includes Revuforj, a menin inhibitor for KMT2A rearranged AML, and Niktimvo, a CSF1R blocker for chronic GVHD partnered with Incyte. In Q2 2025, Revuforj brought in $28.6 million, while Niktimvo contributed $36.2 million in gross sales, showing strong early performance for both products. A critical near-term catalyst arrives October 25, 2025, when the FDA decides on Revuforj's approval for MNPM1 AML. Management's disciplined guidance to keep operating expenses flat for the next few years supports a clear path to profitability without needing new capital. Bloomberg consensus projects Syndax will reach $900 million in revenue and $2.31 earnings per share by 2029. Of course, every investment carries risks worth considering. Regulatory delays, launch variability, dependence on Incyte's execution, expense creep, and financing risk all influence investor sentiment, which could shift quickly if execution falters. The Biotech Capital Compass logo features a compass surrounded by DNA strands, test tubes, and molecular structures, reinforcing the newsletter's focus on biotechnology investment. A quiet Barcelona street at night adds a personal touch from author Hartaj Singh's travels in spring 2022. Coming up in September 2025, we'll explore mRNA as a therapeutic platform in a video collaboration. The discussion will examine how mRNA's modular design and rapid manufacturing enable applications in infectious diseases, oncology, and beyond. The Biotech Capital Compass transitioned to a premium subscription model in January 2025, delivering sharp analysis for active investors and biotech enthusiasts. The newsletter serves active investors seeking actionable strategies, swing traders looking for market timing insights, and anyone fascinated by breakthrough therapies. Author Hartaj Singh brings over 30 years of experience to the analysis. His background spans drug development, corporate strategy, hedge fund management, and biotech analysis, offering a multidimensional perspective on investments. This note examines Syndax as it transitions from regulatory approval to commercial acceleration. Revuforj works through a menin inhibitor mechanism targeting the molecular drivers of KMT2A rearranged leukemia. The drug's development branches into three areas: approved KMT2A rearranged AML, pending MNPM1 AML, and potential post-transplant maintenance therapy. Niktimvo operates through CSF1R blockade, differentiating it in the chronic GVHD treatment landscape. Beyond chronic GVHD, Niktimvo is being explored for idiopathic pulmonary fibrosis, building a multi-indication franchise. Our framework is simple. When early launches outperform and profitability emerges, smaller cap biotech stocks can re-rate meaningfully. The investment thesis follows a logical path. Launch outperformance leads to profitability, visibility, which then triggers stock re-rating. Let's start with some background on acute myeloid leukemia. AML accounts for roughly 1/3 of all adult leukemia cases. While AML can occur under age 45, the average diagnosis age is 69, showing it predominantly affects older adults. Within acute leukemias, KMT2A rearranged cases represent about 10% of all cases, defining Revuforj's target population. Over 95% of these patients harbor a chromosomal translocation that fuses KMT2A with another gene, driving this aggressive leukemia subtype. KMT2A AML is marked by poor prognosis, high relapse rates, and resistance to standard chemotherapy. Historically, the standard approach combined intensive chemotherapy with allogeneic stem cell transplant, though durable remissions remained elusive. Menin inhibitors like Revuforj disrupt the menin-KMT2A fusion, enabling deeper remissions and helping more patients reach transplant eligibility. Now let's look at how Revuforj is performing commercially. Revuforj's Q2 2025 revenue of $28.6 million represents 43% sequential growth from Q1, demonstrating strong momentum. Over 500 patients have been treated since launch, and uptake is moving earlier into second and third line settings. Many patients follow this journey. Revuforj treatment leads to transplant eligibility, then they resume the drug as post-transplant maintenance, extending treatment duration. The October 2025 PDUFA decision for MNPM1 AML could significantly expand Revuforj's addressable market. The FDA granted priority review under the Real-Time Oncology Review Program, expediting the timeline. Phase 2 data showed a 48% overall response rate and 26% complete remission rate in MNPM1 AML, supporting the regulatory submission. Syndax is also advancing Revuforj into frontline combinations with venetoclax and azacitidine, plus expanding into pediatric populations. Turning to Niktimvo, the second product in Syndax's portfolio. Niktimvo generated $36.2 million in its first full quarter, up from $13.6 million in the partial Q1 launch period. Insight records all Niktimvo sales, then pays Syndax a share, $9.4 million in collaboration revenue this quarter. The partnership economics are worth understanding in detail. Insight books all sales, deducts cost of goods sold and commercial expenses, then Syndax receives 50% of the net profit. Management expects Syndax's share to equate to 20 to 30% of net sales near term, with upside as fixed costs are leveraged. By Q2's end, over 700 patients had been treated, and more than 80% of transplant centers were ordering the product. Beyond chronic GVHD, Syndax is running trials in idiopathic pulmonary fibrosis, a large market opportunity. Let's examine what the economics reveal about profitability. Niktimvo's implied operating margin for Insight is likely in the 40-50% range, suggesting strong profitability even at modest scale. Here's how the partnership responsibilities break down geographically. In the US, Syndax and Insight co-commercialize Niktimvo and share profits equally after expenses. Outside the US, Insight holds exclusive rights and pays Syndax tiered royalties ranging from low to mid double-digit percentages. Development costs are a split. Global trials are 55% Insight and 45% Syndax. Ex-US trials are fully Insight funded, and each company funds its own independent work. Now let's look at Syndax's overall financial position. In Q2 2025, Syndax reported $38 million in total revenue and held $518 million in cash and investments. Management's commitment to flat operating expenses accelerates the profitability timeline and eliminates dilution risk from new capital raises. The CFO emphasized at the Citi conference that Syndax is funded to profitability with both products contributing meaningfully to cash flow. What will drive revenue growth through the decade? Bloomberg consensus projects Revuforj will contribute more revenue than Niktimvo, making it the primary growth driver. Revuforj's upside potential spans moving into earlier treatment lines, supporting longer durations and gaining traction as post-transplant maintenance. Niktimvo, though smaller in absolute sales, is especially important for Syndax's cash flow profile, given its high margin economics. There's a notable gap between management guidance and analyst models on expenses. Management says operating expenses should stay flat for the next few years, while consensus models grow through decade end, creating potential upside. If revenues scale faster than expected and costs stay controlled, Syndax could reach profitability earlier than consensus targets. Here are the detailed revenue and profitability projections. Bloomberg consensus projects revenue climbing from 169 million in 2025 to 549 million by 2027, then nearly 899 million by 2029. Within these projections, RevuForge's revenue growth is expected to outpace Niktimvo's through decade end. The earnings path shows how operating leverage will materialize. Syndax is projected to report negative 3.08 TPARs per share in 2025, narrow to nearly break-even by 2027, then reach positive 231 by 2029. Consensus embeds a relatively cautious view on expenses, creating potential upside if Syndax maintains cost discipline. The market has already started recognizing Syndax's improving fundamentals. Since May 2025, rising consensus estimates for revenue and earnings have driven a clear share price re-rating, suggesting further revisions could push valuation higher. Let's look at what sell-side analysts are saying. Analysts remain broadly constructive, citing strong launch momentum, high margin economics, and a robust cash position as key reasons for their positive stance. Key debates center on whether launch momentum can be sustained, regulatory timelines, and whether management can maintain expense discipline. Barclays highlights that RevuForge's early sales are outpacing consensus, reflecting broad uptake and strong patient demand. JP Morgan sees the MNPM1 approval as a pivotal catalyst, but warns of risks if frontline expansion lags. While Niktimvo's launch has exceeded expectations, success depends on whether Insight can sustain momentum and broaden use into new treatment lines. Management has guided to flat operating expenses, yet analysts still model growth. Attention JP Morgan cites in their revised $39 price target. While most agree Syndax is funded to profitability, investors remain watchful for potential financing needs if launches underperform or trial costs rise. Here's why Syndax deserves heightened investor attention. Launch momentum, management confidence, fiscal discipline, and strong commercial execution suggest Syndax is successfully building two differentiated franchises with credible economics. A full glossary of acronyms and technical terms is provided for reference. Extensive footnotes, regulatory disclosures, and legal disclaimers ensure transparency about sources, potential conflicts,